So thank you for coming. Today's topic is the art of spotting the reversal signals. So sometimes I think like, how can I communicate? Oh, Sherlock Holmes, the dog that did not bark, or it was there and we didn't see it, or we were too late. So those kind of things. So I'll teach you how to spot the reversal signals, and I'll give you some examples. So the example I give you, you need to put it on your chart yourself. You can do that on a daily chart. So the chart I'll show you is generic. So you can put anything. If I show you the chart of something ABC, then maybe you just looking for ABC, that symbol. Whereas the concept is valid across. So it's independent of any symbol. So that's what it is. It's independent of any symbol, it's independent of any market. And if I show you the chart of a symbol, then you say, okay, he was talking about that symbol. So try to learn in a generic way, and then you can plot it. So that's what my intention is. So in yesterday's session, or Friday session, I explained to you the seven stages of life, seven stages of market, just like we have seven stages of man as described by Shakespeare. So you can read about the Shakespeare, etc. If you're into Shakespeare. So seven stages of uh, market. So we talked about this declining phase, number one. Then we talked about the consolidation, two and three. So this is where the reversal signals are coming in for bottom reversal. So do you have a way of identifying the bottom reversal? And then the top reversals, number five and six. So top reversal where the distribution is going on. Number two and three where the accumulation is happening. Right now, if you look at the market, it's like, let's say it's in a stage four. So this is a stage four. Everything is moving up. So they are very uh, I don't know. Nobody knows how far can go. So I don't know, but I'm looking for those which are giving me some kind of a signal that they are topping out or topped out. So stage five and six. So then I get ready for those, and I'm just aware of. So I'm being detective. So I'm being in my language we call jasus. So I'm being jasus, where jasus is the guy who is a detective, like Sherlock Holmes, Columbo, or somebody. So I'll explain to you this. Yesterday I explained to you how you can dissect stage four. So the trend. So to trade this stage four, you need to adopt a trend strategy. So the market which is trending, and then you're looking for the pullback, or the market which is breaking out from resistance, or the market which is gapping up above the trend line, or the market pulls back to the support and then reversing to the upside, or the market which is had a tremendous resistance and is breaking out above the resistance. So all those kinds of strategy you can adopt. The market which gaps up, so understand that the different stage of the market, you have a different trading system and trading strategies. So if you apply the same kind of a trading, you just have one, and then you apply in all kinds of market, and you fail. So I have a different class. I teach, and I'll teach you in that class. So when you receive um, email alert, you can come and attend. It's called developing your own trading system. So it will show you, or it will give you the aha moment. So it's all about giving you aha moment that I need to think in this way. That's the way I think. So I'm giving you my thoughts. So I'll teach you today the phase two, three, and five and six. So now, so this is the seven ages of Shakespeare I learned when I was I think I was in 10th grade. So when I was in 10th grade, I came across my cousins. They were busy learning Shakespeare and all kinds of literature, whereas I was trying to learn English, little sentences, and they were into Shakespeare's. But I bought the volume of Shakespeare somewhere, and I started learning. It was very hard for me to learn Shakespeare, but I was doing it, and I was not even required to learn Shakespeare. The school I was, they call it English medium because they teach you a little bit of English, and they call it English medium, and they charge you money. Whereas the real school is like convent school, Catholic school. So my cousins were going into that school, and I was going into English medium school, and they don't know anything about Shakespeare. Anyway, so this is the seven ages of Shakespeare, and I showed you the seven ages of man and the ages of the market. Now, today we are talking about the stage two, three, and five, six. So there are various ways of trying to figuring it out, the reversal signals. So I today, before coming here teaching you, I quickly created this slide, and I started putting all the ways you can spot the reversals. So they are not in order. You can see they are not in alphabetical order because I just started typing. So you can use technical indicators. If you rely on the technical indicators which give you the reversal signal, like maybe divergence or confirmation, so you can use that. You can use candlestick patterns. So if you have mastered candlestick patterns, you can use one candle. You can use two combination. You can three, four. So different combination of candlestick. And I will give you some example of candlestick pattern where you can see which I believe that market has topped out. And then the other another one in the example of gap down. So candlestick patterns. So you can master all kinds of candlestick pattern, and then so candlestick patterns are the patterns where you can some candles are work in a single, just a single one candle you need. Some candle you need two or more, like a help. Most of the patterns, they are three or more, so three or more. Not only that, but then you need the location. So it's not only that this candle is say, okay, I see this. Is it this? Is it this? No. It could be just, it has no meaning unless you put it in proper location. So you need to identify that location where that candlestick patterns is coming up. So the location, the whole landscape. Then you can say, okay, I think I give more validity to this candlestick patterns than compared to the other one because of the location. Same way the chart patterns, the double top, double bottom, and all that. So which time frame you are spotting it? Sometimes the double bottom may come as quick as a 30 minute. So what else you're using when you spot the double bottom pattern? What else you are using to take help? So combination of techniques. The other could be for reversal. It could be resistance reversal. So if you have identified the reverse resistance and you know the resistance, and then it's the market breaks above the resistance and then sharply reversing down. So that's your signal. The market broke the resistance, now it's sharply reversing sharply to the downside. So cross the, it's like crossing the river and then coming back. So in one of the movie called No Country for Old Men. So you know the guy, the one guy, the bad guys are chasing him, and the dog is chasing him, and then he goes and jump in the river, and they send the dog, and he's trying to cross the river, and the dog is chasing. Eventually he kills the dog. So imagine you jump in the river, and then you're trying to reach the other side. It's like crossing the border, but then you come back and then you die because the bad guy is here. So that's what the resistance reversal is. So think about it, a channel, the market reverses to the other side, goes to the other side, and then comes back on this side, and then just keeps falling apart. So that is the kind of movement you need, crossing the river, and then you say, okay, I barely made it, and now the current, sometimes they show you on YouTube, the current brings the person back or the animal back to the other side. So that is a resistance reversal. Trend line break. So the market is moving in a proper fashion. There is a trend, and then the market gaps down below the trend. So then how do you know the market will this trend line break is valid to the downside? What if it goes, and I'm sure you have seen the market just goes above the trend line, and then after 2 days it goes above, and then you say, what, it came down below the trend and now it's going up, or it went above and now it's coming back? So you need to have some combination. So that's why you need to put 2 plus 2 to make it 5. Now another one is gap up. So market gaps up. So imagine in this scenario, the market which are in stage 2 and 3, and then they gap up. So when they gap up, they tell you the beginning of a new um, new life. So oil stocks. So look at the oil stocks; they are gapping up. So you have a basket of stocks, oil stocks, and they move. Some of them just keep on going, like and they don't even gap up. So they continue. So it's not the only the gap which is needed. It's just a rapid fire move. So if you look at it, Valero, it did that. It started at from 120, 123, and then now within a few days it's gone to 132. So reversal signals. So gap up is another one for the upside. Now the gap up. So the thing about it, gap up. Now the gap up itself is a big topic. So gap is a big topic, and then there are various kind of candles. So I have a teaching on just analyzing the gap bar. So analyzing the gap bar. So it's a topic itself. So the gap, where it occurs, what kind of candle it formed, whether it formed within the previous, outside, inside, and whatnot. So what kind of a gap, where the gap occurred in terms of the life cycle. So where the gap occurring. So think about the gap. Think about this. If the gap occurs here, consolidation break, the gap, this gap has more meaning. And then secondary is this gap. But if the stock is gapping up somewhere here, is the exhaustion gap. So the gap occurs on stage 5. That could be the exhaustion gap. And if you go and if you try to trade the gap, and then on top of that, you don't look at the volume. You don't see the stage of that market. You don't pay attention to the volume. You don't have analyzing it whether it's conquering some kind of a resistance. You forgot to look on the left side. So many things, like bullets are flying. Bullets are flying and things are looking hazy. But you need to so if you can master the gap, it's good for you. So gap up, but not all gap up are valid. Similarly, gap down. So the gap down. Um, so I'll give you the example of a gap down. Look at the Roku, today's Roku action. It gapped down after forming the top. So look at the daily chart of Roku, and I spotted kind of late. So my mind, so think about it, the mind doesn't work on the opposite side when the market is moving to the upside. So we are forgetting the other side. There is another side of the market. So just start paying attention and start creating, like familiarize yourself. You don't have to go short. You don't have to open the short position, but just start looking at your basket of stock and say, okay, which one have run up? Which one are showing me the reversal signal? Which are the possible candidates? So start making the list of the stocks. So that's what I start doing, it list of the stocks which when the market is ready to um, pull back, then you already have a candidate. Not at the time when the market is, then you say, okay, which one I think I should select. So you can do that, but uh, maybe you don't make that much money. So look at the Roku daily chart. So on top, so Roku, I think Roku did 5 and 6, and now it's gap down. So it could be the beginning of the stage one again, once again for Roku. For me, Apple is doing 5 and 6 right now. It's 5 and 6. Um, Most likely, it's not 5. If I look at the look at the daily chart of Apple, it's in stage 6 right now. So Apple. So it could do. It can create. Who knows? It's okay. It creates another stage 4, but then after creating a stage 6, the market can do a stage 4. So what will tell you that the market after what will tell you that the market is doing a stage 6, which I explained yesterday, and then stage 1 has started, or it has not yet, and a new beginning of a stage 4 is created. So Apple can create another stage 4, who knows? And then on top of that, so think about this. Suddenly it's like somebody knows in advance. The news is known to the insider. So today it so happened that the TV was so I keep my TV on mute while I'm doing my thing. The TV is not in my office, it's outside my office, so I don't pay attention. So when I step out and the TV is there, so I keep it on mute. Suddenly I saw a picture that the Apple having a patent problem. So So think about this. When the market is doing stage 5 and 6, or doing the stage 6, the distribution, somebody already is step ahead, 3 4 days, 5 days, a step ahead of you, of the move which is coming. Somebody knows already. So think about, if the news comes for Apple having a patent problem. So do you think the big boys or someone doesn't have inside knowledge that the market is having this, Apple is having a patent problem, or Tesla is having this problem? So somebody knows. Some big boys they know. They have a way of distributing. So look at the Apple daily chart, and you will see. I believe that Apple is again topping out at 200. When it was doing it last time, I sent the email when it was 193, 194, and trying to attempt to break 193, 194 last time, and then it went to 198 and then crashed to 165 or something. So Apple may be doing it again. So look at Apple daily chart. So 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 on the top, when the market gap down, so gap down, that is your another signal. So gap down, and if you still don't trust the gap down, then maybe you wait a little bit, but then your risk increases. And then you see resistance reversal. I wrote it in a hurry, and I typed it 2 times. One is a singular and one is a plural. So it's not, I think I was supposed, yeah, this resistance reversal is just duplicate. So ignore that. Support break. So support break, another reversal signal. So support break. So let's see, you analyze it. A strong support in on a stage, let's say on a stage 4 here. After stage 4 is doing stage 5 and 6, so it's creating a strong support. So it's doing it. It's up and down, and suddenly it breaks. So support break can be continuation, boom, 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 like a waterfall decline, or it could be a gap down. So it could be all kinds of signal. So gap down, support break, moving average crossover. So it could be the 20-day crossing below 50, 50 crossing below 500, 200, or 50 crossing above 200. So various kinds of moving average crossover. Another one is the volume anomaly. So I teach classes on volume. So volume anomaly. So volume creates validation, and volume creates anomalies. So keep an eye on the volume and see if the price action is validated by the volume. If not, maybe there is something going on. So price and volume. And the last factor is the time, so which is not taught. So price, volume, and the time. Sometimes the time is like what they say, jig is up. So the time is up. So, and then the stock just starts to fall. So just like in Shakespeare, you see, he was the master. What he said, they have their exits and their entrances, and that ends this strange eventful history. Sans teeth, sans eyes, sans taste, sans everything. So time is up. So just like we all have a time, so time up, market just crashes, and then we just wonder what happened, why. So pay attention to the time. Now, two kinds of action, right? Reversal, trading action. So I'm mentioning it. If you spot the bullish reversal, then you go long. If you spot the bearish reversal, you go short. So it's simple as that. Bullish reversal, bearish reversal. You can combine various techniques to figure it out: bullish reversal and bearish reversal. Anyway, so these two are strategy. Now, look at this chart. So this is something which is not there. I'm teaching you. So, uh, so think about when you spot something, some signal on your chart, whatever way, whatever is telling you, whatever screen, whatever is making you take a look at that symbol. So the process is this: you see the signal, so you see the gap down. So you say it's a gap down. I have seen this before, the gap down. So you see that signal gap down, and you recognize that it's familiar. So you have seen it before, and it's familiar to you. So you say, "Oh, I have seen that before, and it's familiar." But then you start telling yourself what can go wrong. So this comes in your mind, and you say, "No, this gap down, just I don't know, I don't know." I wait, and then you ignore, and then it just continue to fall apart. So when you're telling what might go wrong, you start visualizing that scenario, how much money you will lose in that trade by taking that trade. So because you created a story in your mind, and but you have seen that before it works, you have seen it, and it's a profitable trade. But then you create that step. We all create this step of visualizing what can go wrong, and then we don't take the action. So we visualize that scenario and we feel bad about it. We visualize about how much money we will lose. So this is not a good scenario. So it means you're not confident. If that is happening, then you go back to the drawing board and fix your problem, of acquire the technical skills or risk management skills, or fix yourself, whatever is needed to fix, and then come back to trade. So the ideal scenario is eliminating this step. Tell yourself what might go wrong. So if you can skip this, somehow, so you work and skip this step, this is not the step. So what happened? You create great scenario, bottom reversal scenario. So you visualize. So what do you visualize? Let's say you're looking for the bottom reversal. So you see the signal, you say, yeah, I've seen it before many times, and you recognize that it's familiar because you have seen it before and it makes money. So that image you stored in your brain, because you have seen it, and now you're seeing it on the monitor. So you matching it, and you're getting a good feeling. So this is very important. Feel good about it. So this kind of a feeling, there is an external signal, which is this. You see the chart. So this is your external signal. Now there is an internal signal, which is in your gut. So you should feel good about it. If you don't feel good about it, you ignore that. You don't take that trade. So in other words, you're putting another step. And nobody knows that. Only you know that you need to feel good about it. So you see the signal, you recognize familiar, and instead of visualizing all that bad scenario, which is here, tell yourself what might go wrong, and then you start visualizing all that bad scenario. You're not doing that. You're feeling good about it, and then you take action. So if you keep this on a sticky note somewhere on your monitor, you say, okay, I see the signal, I recognize that it's familiar, and I'm really feeling good about it, and then you take action. So when you take action, then the mental state, what mental state you have. So this is also important. What mental state do you take a bold, courageous action, or you take a timid? So there are various kind of actions. So learn about it. That people take different actions. Different people take action in a different way. So do you take bold action that, like, you go and I'm just saying bold action. Okay, so think about it, bold action. You're not timid. If you're timid, then don't trade it. And maybe if you're feeling timid, maybe you just initiate the trade just buy 100 shares. You don't have to buy 500 shares. Who says you have to buy all in 1,000 shares, and then suddenly you start losing, and then that bold action become loser action. So don't do that. If you're not, you just wait a little bit. Market will tell you, and the reason market will tell you, and market will give you a lot of time to pile up. It's okay to add more at the higher price than to go all in and trying to be a hero and being greedy. Uh, so there is a Pareto rule, 80-20 rule. So 80-20 rule, 80% of your trades are just normal or loser. 20% of your trades, so I'm not saying all, if you have 80%, then you have a bad a win ratio. So what I'm saying, 80-20% rule, if you take 20% of your trade, even 20%, take, even cut it more, 50% of 20%, let's say. So let's say 10% of your trade, they are the one which makes you the most money. So do you have a system where you are in 20 trades, and the four of them are just piling up, making so much money, the other are mediocre, and some are losers. So there are losers there, some mediocre trades, and some are just piling up big profit. So because you you see the signal, you recognize familiar, you feel good about it, and you took action. You took bold, courageous action, but it doesn't mean you just pull, you put just 10,000 shares. I'm all in 10,000 shares here at 30 cents, and planning to sell at 50, and it goes to zero. So don't do that. So have a plan and apply 80-20 rule. See if it works. So here is a chart. It's a generic chart of a bottom reversal signal. So I'm trying to explain to you bottom reversal signal. Let's say this is stage 2 and 3. So the way the bottom reversal signal work, and so there are a lot of technical analysis and the candlesticks and the volume analysis. So all that goes on. There is nothing here, but I'm trying to explain. There's nothing here, but I'm in a generic way. This is not a candlestick pattern. This is not just it. This is just a line. So I'm drawing the line here. So just a bar. So the market, let's say, is trending down. So this is in stage 1. So market stage 1, and it's just crashing. So and then you see this bar. So when you see this bar, and then you say, huh, I see this bar. So this is this looks like to me the reversal signal. So this bar, what you're seeing it looks like it's a reversal signal. So based on your expertise, so you spot that. If you are in a short trade, if you are in a short trade, you would exit from this at this bar, because you see this reversal signal. So if you're on a short trade, you will exit. But if you are really expert and you have all kinds of there are the traders who are always in the market in the same symbol, they are either long or they are short. So that is top-notch trading, and the models they have, they're always in that market, whether to the long side or the short side. But let's say we are not, we are not that, we don't have that resources money wise, and we don't have that expertise. So we just want to be like a little lower level. So think about that. So you spot this crashing, and when you see this bar, and if you have a short position, you close it. Now when you close it, what you do whenever you close a short position, you just don't let it go and you say, okay, I have nothing to do with you, so go away. No, just put it on the other side, because if that tells you this is the exit signal, so so maybe it's about to it will maybe start to do to the reversal to the upside. So just keep it on a watch list, and have some secondary evidence for the reversal. It may not be right away. It's not like if you exited today from the reversal signal and tomorrow you're going long. If that's what you're doing, is not the right way, unless it's just a V-shaped reversal. Sometimes it happens. The market just makes a U-turn. So it's a U-turn, and then you wonder, you miss that U-turn. So it's okay, but most of the time the market gives you the time. If you are watching it, market tells you that, okay, keep watching me. So do you have a method of looking for the secondary evidence? So just simple. So whatever method it is. So let's say you start drawing the line. So horizontal line to the upside, you start creating channel. Horizontal, the upper line, the lower line, upper line, lower line, and then pay attention to the previous history. So look at the previous history. Look on the left side and see if you can, if this kind of a pattern occurring at the same price range where it has occurred before. So pay attention if the market has done the same kind of a reversal before in the same price range, which is doing right now. So take help from the previous history of the market. It's just so happened that we fail to pay attention to the history. So that's why I tell my children, one of the important thing you need to learn is from the history. So history is, you can learn a lot from the history. So just sorry, just see this and see if previously at the same price level the market has reversed. So what the market do most of the time, they go through the consolidation phase up and down, And the clue will start to emerge that no matter what, the market fails to go down. It makes a little lower low and then it goes up, then lower low, then it goes up. Most of the time, the net, the number, if you count the number of candles down days and up days, you will see, okay, the down days are more than up days, but net range is very narrow. And so net change is very narrow. So it tells you that the reversal market is getting ready to reverse. So like Oracle did after gapping down. So market is making its something it's coming up, because the beauty lies in the eye of the beholder, and the guy, those who think this is a fair value, they are accumulating it. And then from stage two, which is a slight down days, more down days, and a more selling going on, you would start noticing that a market starts to move up. Suddenly there is a white bar, a reaction, and then the market just become quiet, and then it goes down 2 3 days, and then suddenly the market moves up, and then it just starts to move up. So have a way of analyzing that market. Pay attention. Start drawing the horizontal line, vertical, on both sides. So you create the lower line, upper line, and then you just adjust it during the day. So you should have a way of getting the signal that it has violated, and then you adjust it. And so you're looking for the secondary evidence. So the secondary evidence will come in um, various ways. It could be a gap up. It could be a news, a catalyst. It could be a candlestick pattern. It could be the double bottom. It could be the sharp intraday reversal. So it could be the reversal on the basis of when you see on your 1 hour chart, 2 hour chart. By the time you see it, you see consecutive bars forming, like non-stop bars on your 15-minute chart. So there are various ways of detecting that this is my secondary evidence. I saw the reversal signal here, but now I'm seeing the move. So this is what happened in most of the stocks during the first week of November, or the last day of October, the 30th of October, 31st, 1st of November. A lot of stocks, they did this. They put on the reversal, and then they just carried this move up. So they created a stage 4 from stage 2 and 3. So this is one way of, this is one pattern of a reversal signal. So I will show you 3 for the bottom and 3 for top. So the market is crashing. You saw the reversal signal. If you are in the short trade, you close it. If you are not, at this bar grabs your attention, and then you're waiting for that moment to feel good about it. So this is the way. So you see the signal, let's say you see the reversal signal, you recognize it's familiar. Now you're waiting for that moment that you feel good about it. So when that moment comes and you feel good about it, that's where you take the bold action. And when you're taking the bold action, it doesn't mean just you go all in. You can initiate a little bit, because when we all make the decision, the moment we make the decision is the point we reach that juncture where we are making the decision. And the decision we are making could be, we may be ignoring something out there, and you're not aware of it. Like sometimes, you take the trade at 6:59 a.m. Pacific, and 7 a.m. the news come, and then everything is just, you say, oh my God, why didn't I look at the clock? As there was a news at 7, what happened? So you forgot to look at the clock. You didn't wait for 1 minute. If you had waited for 1 minute, 7 o'clock news, you would have ignored that. You would not have taken the trade. So it can happen. So because the moment we make the decision, we may be making it a wrong decision, but you take some bold action. You have a plan here. So you have a plan. So you see the reversal signal here, you recognize familiar. Now you're waiting for that moment where you will feel good about it. So when you feel good about it, you take bold action. So when you're taking bold action, so this is the mental state you're adopting. So think about it. You adopting the mental state of being confident, being bold and courageous. So then you say, okay, what does it mean by mental state, confident and bold and courageous? So maybe you can write down the steps. When you are confident, you do this. When you're bold, you do this. So that creates a process or your strategy, which is a mental strategy. So think about it. You see the signal, recognize as familiar. So your belief, so you're injecting your belief because your belief tells you that this signal is a reversal signal, and you're acting on your belief that is familiar. Now you're getting some internal signal. When you feel internal signal coming from your tummy, gut, literally from your inside, that you feel good about it, you take action. So the action you take is a bold action, and the bold action, the mental state. Now, with associated with that mental state, you have mental strategies and the process. So what process you have, like a trading action. So in your, you will, maybe you write it down that I will see the bid and ask. I will see the volume. I'll make sure earning. I do this. I have my scaling plan. I buy this much, and then I will wait for the further confirmation. Then I will add more. So most of the trades which makes you money, or the biggest, are the one where you are buying on the way up. So people don't want to buy. They buy at 10, and then they want to buy at 9. No, you can buy at 11, and then you can buy some more at 13. You can buy some at 15, and then sell everything at 25. So just because you bought at 10 and you're waiting for 9 to happen and it doesn't happen, it's happening 11. That's what you wanted, right? When you like, that's what my sister one time told me. That's Didn't you want that? 10 and then 11 and 12. So think about it. So you have some plan to buy at the higher price, because you got, it's like you they show in the movie, you caught the beast with the tail, and then you're going, and then you're just running around like a circle. So you have that beast and you don't let that beast go. You say, no, I'm not, right, I'm not letting you go. I rather pile it up and go all the way to the moon. So think about that. Do you have a plan? So this is the reversal signal, bottom reversal, one scenario. Another scenario is this, which is a failed trade. So this is a failed trade. So the market is coming down and you spot this reversal signal. And if you are long, you exit it. So you say, okay, this is the reversal signal. I better exit because this is a exit signal. So you exit it. Now, so you recognize that it's familiar. You saw the signal and you recognize familiar, and you're waiting for that moment that you feel good about it. So then you can pull the trigger. So market started doing this, and you started to feel like, okay, I think it's just wait a little bit more. And then you got this signal here, this bar. So you felt good about it, and you took some action. So you took the action, and it comes out to be I mean, you did everything in whatever you're capable of, but it so happened the market just made this the other side. So you will exit. So exit would be somewhere here, uh, this bar. You don't have any reason. If this is your reversal signal and the bar is doing this, you have no reason to your this reversal signal was a not valid. So why would you hold a trade uh, when your original reason, your original thesis is no longer valid? So your thesis was this is a reversal bar and you will pile up on this, but it failed. So this is the bar which is breaking and you exit. So you took the bold action, but it failed. You fail. So it will happen. Otherwise, you will become a billionaire overnight. Not all the trades will just go through the moon. So remember, 80-20 rule, only 20% of your trade will give you the most profit. Even let's say even if you have a 60% win ratio, you should be very profitable, even if you have a 60%, because those 40% trade, the winners, out of those 40% winner, um, take take some percentage, maybe 20% of that trade, of those 40% winners, are the big winners. So 40% of those win trades, so, or 60% of those, little bit, 40% are, and then you can see that only the 2-3 trades in a given week are the big winners. Others are just a mediocre. They move up and then they die down, and then they take their sweet time and then they move. So they waste your time, and then you say, okay, I'm just waiting for you to move and you're not moving. So just, but the one you're moving, you're just letting it, you're treating that one also the same as the other one. The other one, is like you're treating everybody same. Don't treat everybody same. because that trade is going up to the moon and you're just waiting for it. So don't do that. So cut your loser. This you say, okay, go away. I will come back. Figure it out. What will tell you that this is a failed trade? So somehow you have to have a way of knowing that this is a failed trade and I need to just exit. If it comes back, so this is another scenario. Sometimes it happen, and it will happen to all of us, that we exited because we spotted the um, that is a failed trade, and it goes like this, and then it comes back up. So the effect of this reversal comes very late. It fakes you out. This was indeed the reversal signal, but it broke, and now it's roaring back up. So if that happens, um, and you are already out. So this is another one. When we lose in a trade and then the trade is going in that direction where we anticipated, we just say, no, I burned my finger, I don't want to burn again, and then you don't want to do that. That's one scenario. Another scenario happens is mm, uh, when we go long and the trade is putting the short. So um, and then we don't take the short side because we lost on the long side. So if we were on the long side, that trade become a loser. So I cannot open the short side, whereas it's clearly telling you, okay, I'm going south. So just um, change your mind and then go short, go on the other side. Just go on the other side, cut it loose and go on the other side. So this is a failed trade. The third one is a super so it happens sometime. It happens also. So you need to have a way of analyzing this bar. So the market is crashing, and let's say this bar occurs. So it could be just a gap down. It could be a candle, which this is a reversal. It could be this bar is happening, and in terms of location. So overall landscape, and this bar is happening in that right location. So think about the location. This is the right location, and this is the reversal bar. So the reversal bar, most of the reversal bar need to occur at the right location. So this is very crucial, right location where it's occurring. So this reversal bar occur at the right location. So now you saw the signal, you're waiting for, you recognize it's familiar. Now you're waiting for it to, you feel good about it. So now the third step. So the third step you may see here coming up. The volume is there. Suddenly, not only this stock, but the stock in this industry group, they are also rising. Some bad news comes, which is good news for this. People dying, million people dying, and then this stock is rising. Good news for this stock because 20,000 people died. This is a good news for this stock. Maybe this stock is the one which um, develops a bomb, like a nuclear bomb. So there's a war, and this stock makes nuclear bomb. So this is a good news for this, and it's rising. So if that's your thing, you're feeling good about it, and then you're going long. So if that's the way you want to make money. So this bar is telling you that this is a reversal, and it's a V shape occurring. So new stage 4 occurs, and this is a very powerful. So out of those reversal signal, there are the reversal signal which are very powerful, and some are just ordinary. So spotting the signal which is very powerful, that makes you money. So if you treat all the reversal signals same, you will make mediocre. But if you treat different signals and then what is happening afterwards, that's where you make the most money. So recent example is Octa. So if you look at the Octa chart, that's the recent example. If you look at the Valero chart, that's the recent example of the sharp reversal to the upside. So once you spot that, that's where you pile up. So don't treat all reversal signal as one. Recognize that you got the beast and you don't want to let the beast go. Because what happened, we want to feel good and we want to ring the register. Oh, this one, I see this green, I close this trade. Boom, go. Okay, I made the money. And then if you lose money in the other trade, so then you start saying, okay, I'm losing this in these 3 trades, $1,000. Let me see how can I make it net. So you close these 3 loser trade, and you close that. So you lost losing those in those 3 trades. Let's say you're losing $1,000, and then what you do? In order to feel good about it, the trade which was making you $1,000, you close that trade also. The winner, the beast. So now net result is zero. So you didn't lose it and you felt good about it. So what happened? Instead of doing that, you were supposed to do close those three loser trade, eyes shut, close it, take that money, put it into that winner, which is making you 1,000, because this is the trade which will turn into $5,000. So in order for you to get rid of your negative emotion and feel good that I didn't lose, close these three loser trade, okay, and then you close this winner trade, which is $1,000 winner, compensate for it, and it has nothing to do, that winner trade had nothing to do with these three loser trade, but it's you who close it. Instead of taking the money and putting in more in the winner, maybe you had more buying power, you should have put more money in that winner trade and ride it all the way to the moon and see 5,000, 10,000, $20,000 profit, but you close it and break even and you feel good about it, and then you say, okay, next day I'll try to find something. So next day when you're trying to find something, what's happening is this process. So the process is that you need to look for something new, and you have to recognize that signal. So you're putting up too much pressure on you. So think about it. You close those three loser trade, you close that winner trade, break even, you feel good about it temporary, only for that day. And the next day you're starting it all over again and you're saying, okay, I need to find somebody who where I feel see the signal, then I have to recognize as familiar, then I have to wait for feel good about it, then I have to go through all the decision, you know, how much I need to buy, whether I need to feel bold, courageous, and maybe you forgot, you took the action at 6:59 a.m. and the news comes and everything is crashing down. Instead of holding that beast, you close the loser trade, you're holding that beast, and tomorrow that beast start to move up again. So it is moving again. Oh my God, I already have $1,000 profit now. Is already making 1,300. So now you have a 1,300 profit. You see the signal. You say, okay, this is the one. So you see the signal. You recognize that once this does that, I feel good about it. I need to put more money into it. I need to buy at a higher price and become bold and courageous. And you scale in more and scale in more and scale in more. So you're looking for this kind of a trade which is making you the most. And then you go become patient. You sit whole day, you're just waiting patiently. Like today I was waiting patiently. It was very hard for me to find any solid long trade. So that's me. So think about it, that what process you have and what you're doing. So this is the v-shaped recovery. Now we talk about the top reversal. So if you reverse the bottom, mm, if you go through this list. So it doesn't matter if it's a you're trying to find the bottom up or you're trying to top. If you're finding the bottom reversal or you're finding the top reversal, it's just a little bit changes. So you're looking for some candle pat indicators. So if you have candle technical indicator, you're looking for some candlestick patterns. So some patterns they work on the bottom side and they work on the top side. Sometimes the pattern is different for the top and the bottom. So it's mostly the same chart pattern. So you have a chart pattern for the top, resistance reversal. So there's a support reversal. I think I was supposed to put support reversal. So resistance reversal. So resistance, it goes to the resistance and coming down. Some kind of a trend line break, some time of a gap down, some kind of a support break. So basically the same principles on the other side. So now you're putting on the hat to go short and you're making the list. So I will explain to you. So this is the reversal signal. So look at this one. The market. So so if right now the market is doing, let's say the market is moving up for last 7, 8 weeks. The market is just continuously moving up, and so you recognize, you say, okay, my job is to, I mean, you can continue to go along as long as the music is there. You make money, and then the music is stopped. That's where the traders they give back all the money. So um, most of the money is made. You make money, your portfolio is growing, and then suddenly when you are closing in, so ideally on the when the market is Unless you did not close any long position, you're 100% cash invested, that's fine. But if you're closing the trades and you're going into cash, so you will see, if you have a system, proper system, you won't be able to find a new candidate to trade long. So your cash is building up. So you're more percentage wise, you are in the cash. So previously you were in 100%, then you go down to 80%, 20% cash, then it goes to 30% cash, then it's like, okay, I only have 20% cash invested, 80% is free because I cannot find any candidate. So, and then you start looking to, you don't have to go short. It's hard to make money on the short, so you don't have to make go short, but you're preparing your candidate for a pullback, meaningful pullback. So based on the reversal signal. So if this market is up, and this is your bar, identifying that this is a bar, which tells me that, okay, I need to exit from this long position. So let's say Apple, and you just put on the bar, and then you say, okay, I need to close my trade in Apple. You went, you close it at let's say 199, you closed it. You didn't wait for it hit 200. The target was 200, then you said, okay, no, I need to close between 199 and 200. Somewhere in between, you just close your trade and ask question later. So now this is the reversal bar. So you closed your trade if you are in the long, or if not, then you put it on your watch list. Now in the next few days is doing this. So think about not Apple. This is not the chart of Apple. Think about Roku. So this is the chart of Roku. So put the Roku chart on your day chart and see this. It starts to do the consolidation at the top. It goes up, goes down, it goes up, then comes down, goes up, comes down. It start to do stage 5 and 6. So stage 5 and 6, think about this. This is stage 5 and 6. And so look at the Roku chart on your day chart. So it did the stage 5 and 6. So it just go up, down, up, down, up, down, and suddenly news comes and it gaps down. So when it comes down, it's like somebody picked it up, threw the ball way far. It's just ball is just flying away. So it's just going somewhere in another land. So it's like a cricket ball or a baseball. Hit the ball and it goes out of the stadium. So Roku is doing that. So it just fell apart today, and I saw it like 5 minutes before market close. So I put it on my watch list for tomorrow. So this is the Roku. So just think about it, Roku, you saw the reversal signal. Maybe you didn't see any reversal signal, but it's doing it here. It's crashing it here. It's doing its gap down. So when the market gaps down, the longer you wait from this stage, the longer you wait, the more risk you pile up, more risk you have, because you don't have any exit signal. Your exit signal is when it goes back into this territory. If the market is trading here, you don't have any exit signal from short till the market goes back in this territory. When market goes back in territory, then you start to wonder that, oh, not from here, but right away here. If the market gaps away, you go short. If you're going short, then you have to wait for your market to come back in this territory, and then you will tell yourself that, okay, I'm wrong, because this is where the sellers are. So if you are a seller, you have nothing to, don't have any business to come back into this territory, because that's where the sellers. And if you coming back in this, then it means these sellers are, will turn into buyers. So all the new buyers will come in, and the market will create a stage 4. So Roku is doing this. The reversal bar came here, Roku is doing here. Now this one, so Roku can do also another scenario. So I'm just giving you all the, sometimes they send you email, if the market does this, if do this, but it will do this and that. So I'm not saying, but you need to be aware of. So if you look at somebody's paragraph, they write it, that they're right, doesn't matter what they're saying, they're right. They will say, I told you. So I'm telling you. So now reversal signal, let's say the reversal signal appear here, and the market is doing this. So you're waiting for feeling good moment, feeling good moment. The feeling good moment comes here. Let's say the feeling good moment comes here, and you take action. So you took action, unless you piled up. People do that. They just push the button and they go all in. So that's not good advice, that you begin your trade with all in, like you just go in and ram your truck there, oh boom, and then thousand shares, and then don't have any money left. So don't do that. If you have a plan for 1,000 shares, just initiate with 2,000. Don't need to go 1,000, because the market, if you are right, the market will tank and it will give you many. Market will tank, pull back, then it will go up, then pull back, then go up, and eventually it will crash. It will go wherever you want it to go. So don't just go all in. So now your exit is, this is a failed trade. So if the market starts to if the market gaps up, it shouldn't start to make its move up. So it starts to give you the reason, gives you some clue that no, this was a reversal signal. This was my entry point, and the market should have gone further low, but it's trying to sneak back in. So this is the bar where you immediately next day you say, okay, no, this is wrong, this is wrong, and then when it does this, you have to exit. Not only you exit, but because your reversal bar comes here and is negated, when the reversal bar is negated, usually there's a powerful reversal coming. So reversal in the original direction, before the reversal was you spotted the reversal. So if you spotted the reversal here and you saw the consolidation, like I'm giving you example of Roku, and then Roku gaps down, and then you went short, let's say today, Roku has no business to come back in this territory. It needs to come down here, and it's not coming down. So if it's not coming down and it's sneaking back in, tomorrow, let's say it starts to move up. So you need to have a heads up that, okay, something is wrong with my trade. And if it reverses sharply and start to take out the bars, you not only you close the trade, the short, you lose the money, but you reverse it on the other side, because that is the powerful reversal to the upside. Now I give you example of Apple. So what the Apple is doing, if you look at the daily chart of Apple, so 3 days ago, so 3 trading days, when it went between 199 and 200, 199.20 and between 199.60, it look at that bar. So that's the first signal. So that is the first signal where I say to myself, I see that signal, I recognize it as familiar. And the number of days it go by not able to cross 200 level with the force, is telling me that the Apple has topped out again. This is the second time Apple is topping out. Previously it topped out between 198, and that's the way the stocks top out. They just trap you. They just make a little. So think about this. Let's say you have millions of shares and in Apple, and then you failed to close it previous top at 198. So now is your chance. This is your chance to close the Apple trade. But if you're a long-term trader like forever and you want to give your Apple shares to your grandkids, so it's fine. You rode it all the way back from 198 to 165, and then you ride it back all the way to 199. You're feeling good a little bit, because previously it topped out at 198.40. Now it topped out is there, right there, 199.60. So you're feeling good about it. But now it's trading between 195 and 196. So as long as Apple does not force itself and boom, cross the 200 level, it has topped out 3 days ago. It topped out. Like maybe on FOMC, it topped out. Uh, so pay attention to Apple. And then maybe you can prepare some more list, such a stock, matching what the Apple is doing. So that's one thing. Now, just like a V-shaped recovery, another reversal signal appears that the market gaps up. So market gaps up. Let's say the market is moving up and then it gaps up. And then it's like a twinkle, twinkle, little star, how I wonder what you are. So that kind of a candle is like it's just, it's just over there, hanging over there, and there is nothing, no follow up. There was no volume here. It's just sitting there. So the location of this gap up matters, and then no follow through. So when that happens, so that is your reversal signal. So you say, okay, I recognize it is familiar. Now I need to feel good about it. So If the next day the market gaps down, so think about it, the market gaps down. If the market gaps down and you go short, if you're feeling good, you go short. This is your stop is right there. Your stop is very close. The more you wait for further confirmation, the loss is and if the trade fails, your loss is bigger. So you don't have to go all in short. You just initiate a little bit, and the market will tell you. It will give you the signals. It will give you the time to, unless the market just crashes and you say, okay, I just shorted only 100. I wish I shorted 10,000 shares. So next time when I see this, I'll short 10,000. And that's the time moment where the trade will go up and you will lose in all 10,000. So just like V-shape, the market does the opposite side also. It just goes up, sit there, twinkle, twinkle, and then it falls. A lot of things can happen also. I mean, the market can just, this is a reversal bar, but then the market goes in a sideways motion, up and down, and then finally it crashes. So, so that can happen. So this is another top reversal signal, the third one. So if you so now visualize it. You're seeing the signal, you recognize it's familiar, then you're telling yourself what might go wrong if you take that signal and you don't do anything, and it was a good one, because you're visualizing all the bad scenario, you're feeling bad about it. So you have to see how many times you saw the signal, you recognize familiar, and you created a story in your mind, and then the trade turned out to be the great trade. So, so what happened? If you keep doing it, keep ignoring all the good signals, instead of feeling good about it, you inject these two scenarios, then you will become like desperate. So that desperation comes over, and then you say, okay, next time when I see it, I'll just go all in. And that's the trade where you miss something in analyzing, and that's the trade which turns out to be a loser. So if you are adopting, you need to be vigilant in all analyzing all trades same way, and and see if you feel good about it. If you're creating a scenario, maybe you need to do something to turn around these two steps, and don't you feel you're not forcing that, okay, now she said I need to feel good about it. So not like that. You really feel good about it, and then you take bold and courageous action. So this is a bad scenario, bad visualizing bad top reversal scenario. So don't do this. You need to do like this. You see the signal, or you need to go through this process. You see the signal, you recognize familiar, and you're feeling good about it. So you're feeling good about it inside your internal signal. So these two are, this is your external signal, this is your internal signal. So external plus internal. I mean, just the way I'm telling. And then you take bold and courageous action. So this is the visualizing the good way of um, good way of analyzing thing. And last is this chart I saw somewhere, so I created it. I'm not saying the market is doing this, but this is the way the market works. In the beginning, this belief market is going up, then there's a hope, there is optimism, and then there's a belief here, the thrill, and the euphoria sets in. And then the market just complacency and anxiety, denial, panic, and anger, and then everybody goes home, and then the market does that. So if you're creating, as if you have an existing position and they are piling up in profit, that's perfect. Just have a way of, I mean, if you have a retirement account and you can dollar cost averaging, that's great. You can do that, or your investment account if dollar cost. But if you're doing swing trading or position trading, then don't. You have to be very careful in selecting your trade if you're a short-term trader. So if you're a short-term trader, you have to be very, and even if you have a investment, maybe you have a way of going all cash in. Usually people go cash here in this phase. They go into cash here. Oh, I'm closing all my position here. Tax man, I have to pay my taxes. I have a loan due and I lost my job. So this is where they go all cash at this stage. Not at this stage, not here, not somewhere here. So, so, um, So that's what Shakespeare said, seven ages of man. Sounds teeth, sounds eyes, sounds taste, sounds everything. So, so I wanted to let you know what you need to do is to start creating a symbol which are very overbought and just put it in your watch list, and so you are ready. So one of the symbol is Apple. I mean, out of all that is an Apple where you need to put it on your watch list. So this concludes today's topic of spotting the reversal signal. And I will see you maybe on Thursday. I'll teach you something else. So thank you for coming. Bye.